Hello and a very warm welcome to the first Home Focus series of the Move IQ podcast, sharing advice and guidance specifically for first-time buyers. And we're bringing you this valuable advice in association with Skipton Building Society, who are sharing all the insights from a lender's perspective to help you understand the mortgage process and beyond. Today, I'm joined by Andy, who's a business development manager at Skipton, looking after their brokers, and we're going to be talking a bit about mortgage in principles. Andy,
Phil.
So the importance of a mortgage principle. Let's kick things off. What is a mortgage in principle and why are they so important?
Yeah, sure. So it's an indication from a lender's point of view of how much they're actually willing to lend to a client or an applicant. It's not guaranteed, so you need to be aware of this, but effectively gives a guide of what they're willing to lend.
And what would the benefits of having one be?
There are a few benefits for it, definitely. I think one is going to be that it'll give the buyer confidence to be able to go out there and actually make an offer on a property with the right indication or right idea of what they're willing to spend or willing to be able to afford, should I say.
Yeah.
And also I think with the competition that's out there, it can, I say stress can put them in a better position if there's a lot of competition.
Yeah, I'd agree. Would you say having one accelerates the whole process?
If I'm being honest, no, not necessarily. I think it's a good tool to have in the bag or towards buying a property.
Yeah.
But would it speed it up? Not necessarily, because there's other factors that come into play. Let's say, for example, they go and make an offer higher than what they originally planned. We'd have to start the process again, or there'd have to be an amendment. So it's good to have in the bag, but yeah.
It's a fairly simple thing to get hold of, isn't it? So it doesn't take very long, so you might as well do it because it puts you in a far better position in the eyes of both the estate agents and the vendors.
Totally agree. The process isn't long. It's normally about 20 to 30 minutes to get done. If you've got the right documents with you, your bank statements, your up-to-date commitments, the rest of it's just following a process. The applications will lead you through it. And as you said, it definitely will put you in a better light, let's say, when you're making an offer.
So, sorry, tell me about how do you actually get one?
There's a few ways to do this. One is obviously if you're speaking to an advisor, then obviously they would lead you through it. If you're planning to do it by yourself, then obviously you've got to do your research. You've got to think about what lender you're going to approach, why you're approaching that lender, is it the right rate, etc. Once you've made that decision, you can follow online the steps that they'll do. And I'm sure that most lenders will actually have advisors in branch that they can contact as well to assist.
Do you actually, at this time in the process, have to choose your mortgage, or you choose your lender and you choose the amount? You get your mortgage in principle, then you find your house, and then you choose your mortgage?
It's a good question.
Or not?
It's a good question. I think the process obviously works differently for different people. And I think it's all about the stage that they're at. So the good thing is if you're going to go out and look for a property, it's a good idea to know what you can actually afford.
Yeah.
So that leads you back into the mortgage in principle, or some lenders call it decision in principle. So it's definitely worth having a look at that before you go out there to officially make your offer.
But what you're saying is actually it's better if you can make your decision on what mortgage product.
Yeah.
Whether it's going to be fixed or variable or what.
Exactly. I think we're opening up another area here. If we're going to look at products as well, it's yes, you can look at fixed. Yes, you can look at what best fits, but it's all relevant at that time. So some lenders, you will not save or secure a rate at mortgage in principle stage. You have to go all the way through, whereas other ones you will be able to. So it's all relevant to that situation.
How long does a mortgage in principle last for?
So it varies again from lender to lender, but on average it's between 30 to 90 days.
Okay. And are there kind of restrictions or limitations to their use?
Not necessarily. I mean, obviously they are intended for what they are intended for, but to be clear on this, it's not a guaranteed from the lender's point of view, it's not guaranteed to say, yes, we're lending you this money.
Yes.
It's an indication. And that's the key point.
Yeah.
So from that point, it still needs to be underwritten. You still need to submit your application. They need to approve everything. And at that stage, you move into the mortgage offer.
But you're up and running. You've got a bit of paper or something to document that you've had those conversations.
Exactly.
You're serious about it.
Yeah.
Which is good news.
Yeah, which is very good news.
Any final tips for somebody trying to get one or thinking about it?
By all means. I'd always say if you're stuck, don't force the issue. Get advice. Speak to somebody that knows what they're talking about, whether it's an advisor or at a lender directly. Make sure you've got your documents in place. So in other words, your bank statements, your commitments, you're aware of what your balances are, up to date. But beyond that, just make sure everything is in order before you go and do it.
Good advice, as always.
Thank you.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.